The way I look at the world as it is shaping as we go into 2026, volatility is the new normal. And I think it is very important for treasuries to stay in tune with where their business priorities are. The volatility in the world today is actually throwing challenges at corporate treasuries from all angles, whether it is macroeconomic functions, whether it is geopolitical risk, whether it is shifting of supply chains, impact from tariffs, plus disruption that's happening in almost every industry sector. Treasury's role is now going to be about partnering for growth with their business partners, because this is no longer about Treasury being a middle office function. I think Treasury needs to kind of move and become front and center and partner with business to drive that whole growth agenda for corporates. I believe, at least in my experience, what I've observed is treasuries have tended to centralize and bring a lot of the functions back into the corporate. I believe, given the volatility in the world, given how dynamic the global landscape for these multinationals is, they need to start looking at decentralization and delegating power into the regional treasury centers or into the countries for them to be very nimble. And if treasury then needs to actually partner with business, they need to be dynamic. They need to be on the ground, having the right seat at the table, partnering with corporates to effectively drive strategy. I think bankers need to start evolving into sector specialists, because banking needs to be a part of that ecosystem to partner with treasurers, to bring them ideas to actually help them on that journey to partner with business for growth. MUFG's approach to corporate relationships is traditionally been very long-term relationship oriented. And that continues to be effectively the ethos of what MUFG does with its corporate clients. For us, our philosophy is we want to see our corporate clients through cycles. And as a result of which, everything that we do across the 50 markets that we are present globally is around that consistency of ensuring that we are actually partnering with our clients for growth. When it comes to our approach from a client engagement point of view, our strategy traditionally has largely been around how do we deploy our balance sheet meaningfully to help our customers sustain their growth trajectory. Now, whether that comes through working capital financing, whether that comes through inventory solutions, whether that comes through end customer financing, or just helping them with managing financial risk, whether it's on the rates or on the currency side, is how we've partnered with our corporate treasuries to help them manage their business and their risk globally across the 50 markets that we are present. We want to be there for our customers when they need us, in the markets that they need us. Staying invested in markets where our customers need us is what effectively drives everything that we do from a strategic perspective. We have a markets platform globally. Our depth and breadth in every market helps us with deep liquidity, and hence our ability to offer, whether it is short-term or whether it is long-term solutions for managing currency and interest rate exposure to our customers. We are also the world's largest project finance bank, and hence our ability to actually go longer in terms of tenure and hence help clients manage that risk, whether it's rates or currencies, is again something that plays to where MUFG believe our strength really lies, and we can support our corporates. When it comes to working capital solutions, especially in ASEAN, where we've made tremendous investments over the last decade or so, our ability to partner with our customers to help them manage supply chain risk, whether it's on their suppliers or whether it's on their distributors or whether it's on their end customers, again helps us to partner and bring a different kind of solution which helps them with risk mitigation. And hence our objective or our solutioning around working capital, around rates and currencies, is actually helping customers to, again, what I mentioned earlier, embed treasury in the ecosystem, understand the risks that exist for these corporates in the entire ecosystem that they operate, and then providing solutions to them which just go beyond financial risk management. And that's how I believe MUFG has been over the years differentiating itself in terms of our relevance to our corporate customers. Asia Pacific as a region and ASEAN within that are something where MUFG has been very focused on from an investment perspective. We call Asia Pacific as our second mother market after Japan. And in the last decade or so, we've invested more than $14 billion of capital in acquiring strategic stakes in banks across Southeast Asia. What that has done for us is it has actually helped us bring solutions to customers which help them manage and mitigate risk given the depth and the breadth at which we operate in Southeast Asia. Our ability to use our partnerships in the banks that I mentioned earlier, where we've made significant investments, we could go down the credit curve. We have consumer banking platforms. We have corporate finance companies in each of these markets. So our ability to actually help customers, whether it is issuance of debt, whether it is selling more into these markets, whether it is managing the risk, all of that's something which I believe MUFG can very easily bring in partnership to our corporate clients. And I think that positions us very uniquely in Southeast Asia and in the wider Asia Pacific region. I operate the global business on a model of how do we shrink the globe for our corporates. As the global head of subsidiary banking, it is very important that we're actually bringing value to our customers in all the 50 markets that we operate in. That to me can only come if I have localized talent. So I have a team in Japan, I have a team in Asia Pacific, I have a team in EMEA, and then I have a team in the Americas. All of these regional teams align with the global relationship manager of a particular corporate. As a result of which, our model operates around a strategy that is developed at the head office, aligned with the corporate at the head office level, and the execution then happens on a global basis, but a regional level on the ground. I think we've really got better at refining that model to an extent where I think it works very seamlessly now, and we're able to really, bring value no matter where our corporates are operating across the 50 markets that we are present. The first thing that I look for in bankers that I hire or bankers that I want to work in the subsidiary banking business is their ability to empathize with our clients. While everyone thinks that banking is commoditized, I honestly think every client has a unique problem, even if they're operating in that same market. Your ability to relate to the customer, to really go and get deeper in understanding where they're coming from, what is driving that pain, actually helps us to differentiate and then solve for a problem in a very unique manner. Because everything that we do in this business is bespoke. Number two, I want them to be curious. If Treasury has to become a better business partner, then my bankers need to understand the business as well as what Treasury does sitting inside the organization. And for that, they need to be curious. They need to understand the dynamics of the local market. They need to understand the dynamics of what's happening in the sector for them to be able to then partner with the Treasury teams on the ground to bring value.